Hi there, welcome to GrainTV. It's Thursday, July 28th, a day lower in the grain markets. Let's take a look at GrainEdge's trading platform and see where we closed. In Chicago, beans the leader to the downside, giving up 6.5 cents a bushel. Wheat and corn also grinding lower, giving up nearly 3 cents a bushel in both cases. The news out today was pretty light. There was some export sales. We'll get to those in a moment. But first, let's talk about the wrap up of the spring crop or spring wheat tour that was happening in North Dakota this week. Overall, the crop tour found a lower than last year average, coming in at 45.7 versus last year's spring wheat estimate that they put out at 49.9, but it's on par with sort of the 5-year average of spring wheat coming in at 45.9. So overall, nothing too dramatic there for spring wheat, but overall we continue to trade a lower wheat number or lower wheat market. The one thing that is promising for spring wheat potentially is the value to protein that could be arising this year. We know the hard red winter wheat crop had pretty bad protein because of heavy rains, and so there may fetch a premium in the spring wheat markets as we move throughout the season. Right now there's not much of one, but traders are certainly thinking that may change as farmers tighten their fists on holding wheat stocks. Other news out today, we had Thursday's export sales report. These numbers were certainly nothing to get excited about. They were either within analyst expectations or below expectations overall. So as we entered the morning break period, we were actually positive for most of the markets going into this number and these forecasts, but overall the numbers were disappointing and we traded that lower going into the break as well as much of today. Let's take a look at the numbers specifically. Soybeans on old crop came in with net cancellations of just under 1,000 metric tons versus expectations that we would still be doing business on old crop beans, 250 to 450,000. I think even more disappointing though is the new crop estimate or the new crop sales that were only 678 versus 600 to 800. So what it is within analyst expectations, it is still on the low side. Likewise, corn coming in on the low end at new crop sales of 476 versus 450 to 650. Wheat coming in just as usual, sort of in the mid-ground at 506,000 metric tons versus 400 to 600 expected. Now, one thing I wanted to talk about was where we stand in new crop sales. We have big numbers that USDA is putting forward in 2016 on the heels of a big crop. They're expecting big export numbers from the US. And so we need to sort of see where our export pace lies so far in new crop sales. And so when we look at this, let's take a look at new crop export sales this time of year versus the last 5 years. And what I've done is highlight in red the worst year at this time of year and the best year in green. And what you can see in the case of corn, right now our cumulative export sales for new crop 2016 are only 7.1 million metric tons. That is certainly better than last year at this time when it was 4.3, but not anywhere near 9.0, which was the high we've seen in the last 5 years. Likewise, I think soybeans in particular is problematic. 9.8. In 3 years, we've had over 15 million metric tons booked by this time of year. So the fact that we're a third of the way to that number historically is I think, problematic. And then wheat continues to be better than last year, but again, nothing to get really excited about. So overall, the export numbers are just sort of there. They're not lighting a fire under anyone at this time. And certainly with the weather looking positive, there is some heat in the forecast for the next week, but overall, I think the traders are pretty well banking on, if not record yields, certainly really good yields when we get into the August crop report. Let's switch gears and talk about the corn market, which continues to grind lower. We've been talking about this long-term weekly chart out of the GrainEdge trading platform. Long-term, we're looking at that 318 low. That's sort of the point back in 2014 where we bottomed. I think that's a very distinct possibility here as we grind lower. The short term, last week's weekly range had a low at 326 3/4. We're around 333 today. So look for that 326 3/4 as the next test down, because that was last week's low and the next major threshold we need to get to keep moving lower. And I wouldn't be surprised to see us get there Certainly the things that are positive are few and far between at this juncture. So I think the market will probably continue to grind lower as we look for better prospects and sluggish demand, especially in the export numbers. That's all we've got today on Grain TV. As always, if you'd like to learn more about our grain marketing services and our trading platform, visit us online at grainhedge.com and take a free trial of our trading services. As a GrainEdge trading client, you'll get our technical alerts email first thing every trading day. Technical Alerts is a powerful system that generates quality trading opportunities. Each trading opportunity shows a chart and analysis providing clear price targets and risk potential. Technical Alerts look at historical chart formations and compare the current environment to the past to form concrete trading recommendations. The commodities covered by Technical Alerts includes grains, livestock, crude oil, currencies, bonds, and metals. Start your trading day with the most powerful insight into market direction and improve your trading today. Sign up at grainhedge.com to become a client.